Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit CFDS.com for your trading needs. Alternatively, you can visit the educational site, which is www.cfds.education. Okay, let's try and decipher exactly what's happening here in terms of FTSE 100's price action and the actual potential movement for the remainder of the day. Now, the FTSE itself, let's take the cue from obviously US markets, finished up quite stellar, although did actually retrace going into the close. We had the Shanghai up almost 1.8%, the Hang Seng up 0.7%, and the Nikkei up by 1.6%. Now let's try and decipher the Shanghai market. Shanghai market, regardless of obviously the Fed movement, etc., still remains bearish given the fact that we certainly have held that FTSE 75%, and we now are into horizontal resistance on the Shanghai index itself. In terms of the Nikkei, yes, we had this move higher, we've had this gap higher, but the actual true picture is the fact that the Nikkei still remains weak, given the fact that we failed to make a higher high, and it certainly does remain weak given the fact that we've broken out this rising contracting wedge pattern, and you can see that we put in a potential topping tail doji, so we failed to continue on the thrust higher from the US session, and therefore that's a risk off scenario, a risk off situation. Now you do have an unfilled gap below, so again keep an eye on that. So therefore you've left a bearish argument behind. Not only have you left one there, you've left one below as well. So you have two unfilled gaps below, given the fact that we have three, should I say, 1, 2, 3, three unfilled gaps below, 1, 2, 3, and therefore this retracement obviously has failed at 200 MA, and therefore you are looking at a potential downward movement ever since we've broken out this rising contracting wedge pattern. So regardless of the spin and of the media and the way the markets are interpreting, etc. so far, the real reason why the markets are higher is because of the euro. Mr. Draghi relied on Miss Yellen to talk up the dollar and obviously force the euro lower, and that's exactly what's happened, and the markets are inflating accordingly. How long that will last, again, that is debatable, and certainly from my perspective will not last long at all. Okay, everything is based on fundamentals, and given the fact that you have a rising dollar, you can see that copper and oil are still languishing at the lows, and therefore that is considered to be bearish. Okay, so from my perspective, certainly a bearish close on the Nikkei. Okay, now we can look at the actual indices now in terms of, before we do, let's just look at the fundamentals as always. Okay, so we've had the Asian markets higher but lackluster and into resistance in terms of Asian markets. Now let's have a look at the actual economic data today. We had weaker German data, so German IFO data certainly failed on all accounts. 108.7, 104.7, 112, all missing expectations and therefore bearish. Okay, retail sales out of the UK, very stellar, very impressive, 5%. rather than the 3%, okay, year on year, month on month, 1.7%. So from my perspective, that certainly raises concerns in terms of a potential rate hike. And also the CBI data as well in terms of the UK certainly came out better than expected. Expected was -10, it came out -7. European construction data certainly came out stronger. European unemployment number certainly came out stronger as well, so therefore by helping the euro. Okay, and given the fact that we've had stronger European data as opposed to weaker German data, I mean, that's certainly an argument that you could have in terms of a mixed message there. But from my perspective, given the fact that you have stronger UK data for now, it certainly is helping the FTSE to a large extent. But then one needs to consider the fact that the FTSE rose yesterday on tepid inflation data and weaker wage inflation, and therefore that led to a QE-led rally. Okay, so the sterling certainly fell lower yesterday on wage inflation data. Okay, now the question is, this sell-off in the sterling, obviously based on the expectations that you are going to get a rate hike much further than expected, i.e. 2016, probably towards the end of 2016 now, possibly even 2017, and that obviously led the FTSE 100 higher. Given the fact that the retail sales and CBI data has come on stronger than expected, that will obviously now trigger the rate hike concerns, okay, in the UK, and that should be negative for the FTSE 100. That's my interpretation thus far, okay, especially given the fact that the Fed has obviously hiked as well. We have this downward sloping contracting wedge pattern, and we have a double bottom on the actual sterling itself. Okay, so retail sales and CBI data will certainly help sterling higher, and that will obviously force the FTSE 100 lower to a large extent. Okay, now in terms of price action now, let's just look at the market, given the fact that the dollar itself certainly is pushing higher remains bullish to a large extent, especially given the fact that the bond market certainly is now into resistance and remains weak. And obviously, if the bonds start to fall further, then the dollar will start to rise, and that will obviously be net negative for the actual commodities and equity markets alike. Okay, now the FTSE 100 now, let's bring up the actual index itself, looking at the weekly chart first and foremost. We still have an inside bar, so don't forget that, folks. It's still inside bar, inside bearish action, given the fact that the weekly candle on the 7th of December, or should we say last week, the market is trading within that, and therefore the bears are still in control, regardless of what the Fed rally has done thus far. Okay, now in terms of the actual daily chart, we are now into the fib 50% retracement, and therefore this is considered to be bearish. The market, given the fact that oil is still languishing at the lows at 35, copper is languishing, no real catalyst ready to propel, and as we've seen, the Asian market certainly finished negative as well towards the end of the close. That's not exactly positive. Now the FTSE 100 has this bull flag situation or scenario here. Now we do have resistance at the two zones. We have resistance at 6160 and 6170, so therefore that will certainly act as a barrier, and therefore will prevent the FTSE 100 from moving any higher from my perspective. Terminate chart, the FTSE, obviously you can see here we are consolidating, but the pivot high remains at 6160 intraday, and therefore you are looking for a potential. If you do get a sell-off, you're looking at support at the 6125 zone, potentially even lower at 6090. So certainly take into account those zones, given the fact that the Fed is hawkish, and their dot chart, etc., certainly is hawkish too. Okay, now in terms of the price action on alternative indices to cross verify. Now bear in mind the FTSE 250, take into account that the sterling is now at double bottom and therefore is negative. And as you can see here, the FTSE 250 now is certainly coming into resistance, and this will be certainly bearish for the FTSE itself. Now you do have a potential scenario of a H&S formation, so one needs to remain obviously abreast of that. So certainly take that into consideration as well, and price that into your potential trading strategy. And therefore you are looking at bearish price action for the FTSE. The FTSE 250 is into resistance, whilst the sterling is into support. Okay. Now, as you can see, oil is still languishing at the lows, so no bullish argument for the FTSE itself. Back at that retest level at 35, 34, therefore remains bearish. Okay. In terms of we can bring up the chart of Brent as well whilst we're here. Bring up the chart. I mean, just make you aware, the 10-year. This is the daily chart. Yes, you do have horizontal support here on the 10 years, so that's something certainly to take into consideration. But the 4-hour chart itself certainly is now into potential resistance. 60-minute chart as well is into resistance. Okay, so if the bond market starts to fall, the dollar will start to rise. Okay, and take that into consideration. And that was obviously net negative for the FTSE 100 itself. Okay. Now, in terms of the actual alternative indices, the volatility index is the key driver here. Now, the volatility index has obviously found support at this 15.2 level. We're consolidating here now and looking for a potential thrust higher on the volatility index, and that will obviously cause the FTSE 100 to certainly move lower too. Okay. Now, the FTSE All Share, again, we've had this stellar rally, quite an impressive rally as such, given the fact that even with the Fed rate hike, okay, in terms of the FTSE, you can take the pivot high, take it to the pivot low. You've bounced off that potential support zone, and you are now into that fib 50% resistance, and therefore you are looking for a bearish move on the FTSE itself. So again, this confirms the weakness on the FTSE and potential resistance. Euro top 100, again, you are coming into resistance on the Euro top 100 too. If you bring up the actual fib ratio again, taking the pivot high, taking it to the pivot low, you are into that fib 50%, and you've got horizontal resistance here. Previous support equals resistance too. So these are all zones that we're going to be observing very carefully. Okay, the actual FTSE Europe as well. Now let's just bring this chart higher, given the fact that European indices certainly very bullish, with the DAX up by 380 points, or almost 400 points now. So very impressive thrust. And you are into previous support equals resistance. So that's something that we're going to keep an eye out for. Okay, right. In terms of the actual dollar itself, I've covered the dollar, copper itself as well. Again, copper still languishing at the lows on the 60-minute chart, so no real thrust high, especially with weaker German data today as well. It will certainly be kept under immense weakness. Now, the oil and gas sector certainly is not moving higher at all, especially with oil languishing. The mining sector still remains weak, folks, even with the Fed rate hike, as we all know, is certainly even more negative and even more bearish. The retail sector on the FTSE itself, previous support equals resistance there. The FTSE 350 banking sector certainly has rallied given the rate hike, but still is facing pressure given the fact that we have talk with regards to the capital requirements or capital reserves being increased. So again, this is a concern. Okay, so we failed to hold the previous support equals resistance. Okay, we have pushed higher, so certainly is causing a nice rally in the FTSE. But will that be sustained? That's the question. Okay. In terms of the pharmaceutical sector, yes, we've had that bounce from that horizontal support zone, and we are now coming into resistance. So therefore, weakness on the FTSE is expected. Telecom sector certainly has had that bounce, and again is into the 200 MA. And therefore, overall, it looks as if all indices now are certainly into potential resistance. Now, the sectors itself, should I say, previous support equals resistance certainly has held, so we've had that bounce, and again, we'll see whether or not that can be sustained. Now, the insurance sector again is back into that 200 MA, and therefore you are indicating weakness on all sectors from my perspective on the FTSE 100, especially with the Shanghai, like I said, into resistance, and the Nikkei putting in a topping tail, so no real conviction post-Fed. Okay, so therefore certainly being interpreted as bearish from my perspective anyway. Okay, so that's the bias, folks, in terms of the FTSE 100 itself. Going back to your 10-minute chart, you are looking at resistance at 6150 to 6160. If that level gets taken out, then you need to go back to your 60-minute chart and look at potential resistance next at the 6227, 6230 level, and that will be the key resistance zone. I don't expect that being hit today, given the fact that we have weakness in the commodity sector, and therefore FTSE will be unable to rise. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs.